book on this late night business tip. Of course, my name is Dustin. If you are new to my videos, welcome to Floyd's Landscaping and Property Maintenance. Tonight, within these next few minutes, I'm going to be discussing where I'm following up with my company, where I'm at. I'm currently awaiting my LLC license in the mail for my business. And I'm also in the process of designing business plans made to direct my business for my company so that way I can make maximum profit. Now the goal is for me to be efficient and maximize profit. Those are the two goals for my company. Organization with taxes, so you have taxes. Organization with bookkeeping. Sorry, I get very distracted. Organization with taxation purposes. Organization with receipts, transactions, the whole 9 yards. The list goes on. There's a few main things I'm going to be covering with you right now as we speak. And that is, for those of you in 2015, there's two options you have and you need to do both. Digital invoices and receipts for your customers, digital estimates and physical estimates. Both to have on hand, to keep handy, so that way when you go do a job, this is for landscaping people, but you can apply this to any business. When you go to do an estimate for a customer or consult with them on a price for an agreed service for you and your company, it's called, I don't know if y'all can see that, sales order. And it leaves a receipt for some of your customers who may be older, who are not into the 2015 age style, receipt taking digitally by email and or other, ways of taking a payment or so on and so forth. And it's good to have that handy because, for instance, an example, I had to write a receipt for a customer today due to me opening up my business account, and I do bank with Chase. I've only had a few issues, but nothing really major, some small stuff. But the goal is to make as much money as possible. You put it in a bank account, you deduct 30%. So for an example, if I have $30, I take 30% out of $30, 30% of that for tax purposes, which is $9. So technically I have $20, $21, just right offhand to give you a general idea. It goes 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, 55, 60, 65, 70, all the way up to 100. Taking 30% out of each transaction and setting it aside in your bank account, in your business bank account. So, for instance, how I'm going to be doing it is for the bookkeeping, for the master bank account, business account, and the savings business account for my company is for the 12 months that I take transactions consistently with my business. I will bookkeep those for 12 months. Now, each month represents an envelope or a pouch, like a little crown pouch that you can put your receipts in. It's got a clear side that you can see through it. You get 12 of those. I kind of learned this idea. I do give props to Keith Kalfas, the landscaping employee trap. I do give a lot of credit to him due to the business entrepreneurship and the information that I do receive from his videos. Go to his channel, like, subscribe, and share his videos. They're amazing videos. They're very business-like minded individuals who can teach you like I'm being taught and learning as I go. But these are some things to keep in mind. 12 months, 12 envelopes, okay? If you take a fuel break with your vehicle, you get in your truck, and you go to fill the tank up, you take that receipt, you put it in an envelope. If you buy flowers or something for a customer, you take that receipt, you put it in an envelope. If you buy bushes, you take the receipt, you put it in an envelope. Looks like the guy was checking his door. Sorry, I'm here in the Walmart parking lot waiting on my wife, who's in the store. But you take those 12 months and you hold it till you pay your taxes. So all the money you set aside for your taxes, all that money that you set aside, 30% per transaction, those transactions in your taxation area for your savings account, for all the money you put back from each transaction, will pay at the end of the year for tax purposes in the account that your cash flow is in. So that way you represent all your receipts, you get audited for your receipts and for your transactions. They'll match them up. They say, hey, okay, you check out, and then you get, those are tax write-offs. Another thing is if you go out to eat or something and it's important, you want to call that a business meeting. You want to bring up a couple of